Candace, why should someone listen to this podcast today?
Well, if you're thinking of selling your business or if you're thinking of buying a business, there's a little bit of lead time and work that needs to go into it. And this gives you a little bit of an idea. So listen up.
Hi, and welcome to Serenity Now, a place for entrepreneurs to ask questions, learn, get connected, and be inspired. Join us as we talk about all things business and the search for the ever-elusive Serenity Now in both business and personal life.
Welcome back to another episode of Serenity Now for Entrepreneurs. I'm one of your co-hosts, Rita Kim, and I've got today two other co-hosts with me. Peggy, welcome.
Hi, Rita.
Hey, and Candace, welcome.
Hi.
And today we're doing a hot topic, exploring one of the most significant shifts that are happening, I guess, on Canada's entrepreneurial landscape in the coming decade. It's business succession planning. In 2023, we had the Canadian Federation of Independent Business, CFIB, release a report called the Succession Tsunami, basically highlighting that 76% of Canada's small business owners are planning to exit within the next 10 years. That's a lot. I think they've converted that over to about $2 trillion in business assets that are going to be changing hands. So we thought this would be a timely episode. It's time to act now, both sellers and, that are thinking about transitioning and buyers. Hey, we want to talk about the other side of this as well. Buyers looking to step into established businesses. So that's the topic for today.
Interesting, Rita, because it's a really hard thing to sell your business. I've had personal experience actually selling my business and a few dates I went on with a couple before I actually sold it. And it's a challenging thing. I think for most small businesses, it's one of the harder things you have to do. And I think it becomes a question of, do I try to go through that process and establish a plan, maybe a 5-year plan to get ready for it and execute on it? Or do I just walk away? I'm a kind of key person business. So for me, it's tempting sometimes when I think about it, just to close the doors, refer my clients elsewhere. So what do you guys think?
Well, you mentioned that little comment about dating a few potential buyers, and actually the white paper we're referring to talks about one of the barriers to selling is finding the right buyer. So Peggy, why did you consider it dates, and why were the buyers not right for you? What were the considerations?
Well, when you go on a date and right out of the gate that this person has a different interest than you do. That was the very first time. I had an interested party that wanted to buy half the company and wanted to let me run it. And I'm like, what? Okay, so you're going to own half. You're going to get half the profits, but I'm going to do all the work? Okay, there's just something wrong with this. So that date went sour really quickly. And then the amount that he was going to give me, I made that in a year. And I thought, why don't I just stay here 2 years and I'll make, more than that.
Yeah.
So it has to make sense from a monetary point of view, and it has to make sense from a partnership point of view. And in my old age, partners are a no.
And you know what? So based on the white paper, you've hit the 3 key barriers. So they cite finding a suitable buyer is the most common obstacle at 54%. And then followed by business valuation at 43%. And reliance on the owner for day-to-day operations at 39%. So they wanted you to stay. They couldn't agree on the price and couldn't find the right buyer. So you're hitting all the nails right on the head.
That was the date. That was the first date that went sour. Yeah. And then, just listening to others in my industry, it was a funny time. A lot of shred practices were being purchased, and it's not common for, key person-based businesses to get sold. But there was just a period of time when this was happening. The other type of sales structure that I ran into was a sales structure where I would leave. They didn't care whether I came or went. They wanted the files. They took the employees, or they wanted to take the employees. And then they would work whatever they wanted to work within that file base and give me a percentage of what they successfully achieved with my client base. That was also a bad date. They don't have any loyalty to my clients, and I'm not there to make sure the ball keeps rolling. And what the heck? Did they just want my employees? Did they just want my big clients? Probably.
So that's a different type of valuation, actually.
Right.
So
Yeah.
Yeah.
Structure altogether. It was, like I said, another bad date.
Eventually, you did get a good date, though, didn't you?
I don't know if it was a good date. It was a date. Yeah.
A date that worked.
Eventually, I went into the third one. It's interesting how you learn very quickly when you are trying to sell a business that, at some point you just got to tell them what you want and then walk away if you don't want it. And that's where I got to. I just said, look, I'm not negotiating with you guys. This is the structure. This is how much I want. And come back with something really, nicely tied up with a bow, because otherwise I'm not interested. Now, I don't know if 54% of business owners are trying to sell if you can behave like that. Where are the buyers?
Well, I think there's a few things there, right, that we want to kind of open up there. So you mentioned something that's really important. So most people sell their business once if they're going to sell it, right? Or you're just an anomaly, Peggy, in case listeners aren't aware. Peggy already sold the business once and now she's got it back again. And so this would be round 2. So she might be a little more jaded on this one.
Yeah, a lot jaded.
A little more lot. But most people sell it once. And that one time, I know that Candace and I usually get a lot of them. And this has kind of been one of the backbones of our consulting practice as well, is to support business owners in preparation for exit or sale. And we do that right from the very beginning, because we need to understand what the end goal is, and then how to build a roadmap to help you get there. And then we bring in great partners like Candace and legal and et cetera, so we can map this succession plan out. And it takes, for a good one, it takes 3 to 5 years for us to walk through this in the middle of all the shenanigans that the government throws at us and everything else that's going on in life. And people always say, well, why do you do that right away? Well, because right now, no matter what time you are in your stage of business or what stage you are in your business, now is the right time. It's always the right time, because we also get the people that come in when there's an emergency, medical issue, a family member. You just are, after COVID, a lot of the business owners just got burnt out, with staffing and everything else that's been happening. So that is the toughest time to plan anything. And the series of questions and the work that you're going to do to build the succession plan, which a lot of people say, well, I don't understand. Like, there are so many questions and scenarios that are being posited, and you have to walk through all of them in order for you to map out the best way and strategy to exit. So I think it's really important to take that time. And I know that doing that on top of everything else is never the easiest thing to do as a business owner. But doing that, we've done that so many times. And now we're so happy as our clients because they did it pre all of these things happening to them. Some were in the midst of it. As we were going through the process, there was a family member that was sick or a business partner that fell ill. Working through that timeline and through that process is just as important as every other aspect of your business, from starting it to implementing process, to operations, to sale. Exit is just as important as everything else.
Well, it's interesting that in this report, this is not a surprise, because 75% of these businesses are wanting to exit, in a 12-month period, it actually stated. I don't know if that's happened, but 75% because of retirement. It's not something that came up on them slowly. It's like 35 years in the making. So other reasons are smaller percentages of the reason that people are exiting. The largest one is retirement. So we should all have prepared for this, but it's a tough one when you're running a business.
Sometimes we talk about, how Christmas comes every year and then you're like, I'm not ready. It's like, but I know I could have gotten ready a little bit earlier. I know there was some ability to do some of it. And then it kind of shows up just like retirement, I guess.
Yeah, I think so.
Let's talk a little bit about what being ready means. Because, I know the three of us knows what that means. But, based on the businesses that I've seen trying to help people buy or people trying to sell, there may be some misconception about what being ready means. So, for me, one of the worst things I see is when somebody's trying to buy a business and the financial situation is they don't have decent financial reporting information. And I'm not talking about fancy Fathom or whatever. Just accurately put together financial information. You'd be surprised at how many times I've seen somebody try and buy a business and the information just is not accurate in any way, shape, or form.
So do you want to build a cash flow, Candace? Your team want to handle it? And you're like, no, you guys can do it. I'm like, no, your team. And guess what? I think we lobbed that one back to Candace's team. Who did we have? We had an awesome gal from your team do that one.
So that's number one, right? Number one is you need to have something reliable that people can look at it, understand your business, how much you make, how much it costs, etc. What's the other one, Candace?
Well, the other one, I mean, it's kind of nested within that is I see business owners. I mean, when I'm working with business owners, they want to make sure that they're saving as much tax as possible and they're pushing the edge on whatever expense. So in their financials, there's a lot of what I would call discretionary expenses.
Right.
And if a different prudent owner was running that business, maybe they wouldn't have some of those expenses. So trying to present your business in the best light when you've got a lot of that in there. I'm not saying don't do any of it. I'm saying be reasonable about it. And if you know that there's something that's pretty discretionary, then disclose that so that somebody looking at buying a business can distinguish how they might run the business and what the value of that business might be to them in a different way. So it's still kind of financial, but that's the biggest thing I see.
I'm going to jump in on that one because that's something we see so regularly when we're assisting folks trying to buy a business. And you're looking at the financials. One, you never get the financials in the best light. Two, yes, there are so many what we call discretionary expenses. When we review the businesses in order to try to get, the best possible financing and to really understand the business itself, we take a long time with that so we can actually try to do, the add backs for your valuation. Mm-hmm. And we open it up just like that. And we say, for example, Peggy, I know that there might be some stuff here that might be perhaps an anomaly, or something that doesn't happen or may not happen for the new owner. And if you give me that information, as much of it as you can, then I can add that back in. And then we can say, yeah, that is a fair price that you're asking. And when we open it up like that, Peggy just goes, yeah, let me talk to you. Let me talk to you about a couple of things here. And so it might have assisted them with their, I don't really call it much of a tax strategy, but on the other side of it, we can pull it all back out. And so for the financing side of it, from a buyer side, it actually is really nice to be able to turn that back around and explain it to institutions and be able to say, here's what we've got is the real numbers. What I don't like is some of the brokers or big companies out there that create the package and then they do all these add backs themselves. And then I go back and find out, no, they're not real add backs. So there's a little bit of cautionary to that. So I hope that's quite understood. So financials, preparing them so that they are like you actually have the financials for us to review for the last 3 to 5 years. Make sure that's done. Number two is just making sure that if there is any kind of discretionary expenses or anomalies, or maybe you got an advisor to help you prepare for sale, that's a good discretionary expense because that's maybe a one-time expense that happened over the last couple of years and we can pull that back out. Maybe there's an extra vehicle you're using in there. You do what you do, but we need to pull it out because it's not going to be in there for the new owner. So those are some quick examples there.
The other thing I noticed in this study is one of the major concerns for people about to sell their business is protecting their current employees. I know that's a huge concern for me. I wanted to make sure when I sold my business that my people had jobs, because if I had just folded the business, there was 5 people's mortgage relying on me. So I couldn't live with that. That's why I sold it originally. I wanted out, but I wanted them to have jobs. So that's a huge consideration. And that also puts a big responsibility back on the owner. And in this time when there's so many businesses going to be for sale, and it's my experience just with my own family, knowing that they don't want to be running my business and they don't want to buy it, participate in it. Who, where, how do we do this?
I would say in 23%, according to CFIB, of those businesses sold to the employees. So
yeah, there you go. Yeah. That maybe a strategic alliance with another business or employees, or where do you shop it?
Well, I noticed in the white paper they were also talking about employee ownership trusts, which I think we'll probably be seeing some more of in the future. It's not big in Canada as of yet, but I think they've fleshed that out quite a bit here in the last number of years. So
can we get the Reader's Digest version of what that is?
So basically what happens is a trust is created that buys the shares of the current owner, gets a loan, buys the shares, and then the profits of the business are used to pay off that loan for the shares. And then the employees, because it's a trust, the employees don't actually have to buy in. They become part of the trust. There's got to be a set of rules as to how they become, a beneficiary of the trust and whatnot. But then the trust owns the business basically after a certain amount of time, or after all the owners have sold their shares, or whatever the case may be. I haven't really looked at them closely. It's a way of the employees getting in without having to come up with the money personally, individually.
Ah, that sounds like a good one.
Yeah. But all those things, like it's going to have to be a business that's well run. It has to have a business that has good financial information because it needs to be financed by an institution.
I was going to say, I was going to say then to go back, like I know that that's bigger in US and UK, but not like that's probably why we're not here yet in Canada, because there's so much more behind the scenes here, like you were saying, Candace. But there's another way for employees to buy into an existing business and do it's called a management buy-in. There's employee share plans. There's a few other ideas, we don't actually have this trustability as of yet right now anyways in Canada, but we do have those other options, and doing a management buy-in, for example. So let's say, I'm going to buy into Candace's company, and I've been a longstanding employee for like 15 years. Candace is like, well, we don't want to lose Rita because she's awesome. And, we're going to get you to that management spot, but we want to make sure you're staying for the next little while. So we'll do that buy-in opportunity, maybe at, let's just say 25% to make it easy. And then, my job is to now, as, an employee, I kind of go, okay, well, I like this. This is a good business. I've worked with this person for a long time. They know me. So, we already have gone way past dating. And I go, well, now we need to go back and talk to the bank so we can finance this. And so the bank usually will take a look at this as a shared risk opportunity, because we have the existing owner or owners in place, and they obviously have a vested interest in this. Now we have a new kind of employee coming up the ranks, or maybe you're not as, young, but you're coming in, you're going to buy in. So you're diversifying the risk, and then the bank's going to come in. So that risk is nicely diversified. Everyone's got a vested interest for this business to continue succeeding. It's not a big chunk for the existing owner or owners, but they've just hedged their risk. So look at that. And that's a beautiful plan. And we work on those. We've done so many. It's a really great way for us to hold on to our businesses and not let them die down. Peggy, maybe there's still an opportunity for that second round for you. But I find it works really well. We did that until one of the key employees actually ended up buying out the owners. Like they finished it to the 100%. And it took about 4 years. And it was really, really nicely done. And then maybe you can chat a little bit about employee share ownership plans. Candace?
I haven't actually seen one, to tell you the honest truth, so I don't really know a lot about them, but it would be a variation of the employee trust. A trust is set up to buy the shares, and yeah.
And then so we bring in our accountants, we bring in the lawyers, of course. And again, those are lots of discussions if you've got more than one owner or even one owner, right? Because they may have a spouse or a significant other. And so there's still lots of dialogue happening.
Where does one go to find a buyer? Because it's all very confusing when you're a business owner and you're head down in your business every day.
It probably depends on the type of business. Services business, I would think you're going to be looking within the profession, I would think.
Yeah, a lot of the times within the profession, a lot of people, even though you're somewhat similar or doing some of the same things, a lot of the times you're talking and sharing or moving customers back and forth anyways. And so it's pretty straightforward, and you kind of go to the partners that you already know. Sometimes it could be maybe not exactly the same person that does what you do, but you would then become a value add to the existing business they have.
Right.
So a larger business that would now be able to do, here's another layer of offering that we can add if it's the service business. Usually when it's more processing or manufacturing, that's where I see more of the employees and the management buy-ins, especially because of everything that's been going on with costs and economic chaos, trying to keep good key staff. That's one of the big pieces. And then I guess there could be potentially an opportunity for family members. And then there's that whole vast unknown, unrelated, non-employee people out there that you don't know about that may be looking for a business. There's a few options or succession matching sites now. There is a place called Succession Matching. That's an actual website.
Oh, that's interesting. Okay.
Yeah. There's different places that are kind of popping up all over Canada. A good friend of mine, Liz, owns a company called Village Wealth, where the buyers and sellers come and say hi. So there's a lot more of that happening. And probably after the release of this report, that makes sense for a lot more of these things to be happening. You know, when you want to go find a buyer, Peggy, of course, there's the brokers that are out there as well. And then sometimes it's just a matter of just finally just saying something to the people that you're already working with, your lawyers, your business advisors, your accountants, who also have a pretty big network that may go, you know, this person I know has been eyeing your business for all this time, but we thought you'd never sell. You know, or it might be, like you don't know, like bankers. It's, you know, you kind of sometimes they're like, do I tell them anything? Do I not tell them anything? But they're a good resource. One of the interesting things that came out of this tsunami report was one of the local not-for-profit government banks, Futurepreneur, began a series of workshops called Owners Wanted. And it was started in BC. It's now gone national. And I was lucky enough to have the opportunity to be a part of this program right from the beginning to support how to help business owners buy in to this wave of businesses that will be transitioning out. But what I found in the past year of doing this is that pretty much in every one of these sessions, we have so many sellers coming in saying hi. And so they're saying hi to buyers right there, Peggy, right there. Either in-person workshops or online saying, hi, I'm here to sell, but I'm here to learn. So I think the biggest thing is first learning. Right now, we're in the middle of 3 different transactions with buyers that are looking to buy a business, and from business owners that are selling that are saying, hey, how come you can't tell me what you're going to buy this business for? And if you can't tell me, you got to tell me right away. I don't want to have you waste my time. To people that are saying, well, I'm totally okay. I'll spend the next year working through this with you. I'm happy to do a vendor take back with you. Happy to give you that transition training. But the biggest thing is always like, let's make sure you're ready for this sale. Because what I found is, you know, it usually takes a good 3 tries. First time you meet someone, it might be seller remorse. The second time could be buyer remorse. And the third time, everyone's like, okay, we're done. Like, let's just move this forward. So
you learn a lot going through a proposed sale. You learn so much. And it's almost like you probably just need to realize that your first or second attempts are not necessarily going to work unless you have an advisor holding your hand the whole way. I personally did not. And I had my lawyer. Don't get me wrong. I did have really good people around me, but from that sort of emotional point of view, because it is very emotional as well as technical, I was kind of running on my own on that. And I think that, you've got to really understand your reason for selling, and you really have to hit that real desire, because if you're kind of on the fence, it's very hard to be decisive. And then once you're ready, you'll know when the right buyer comes because things fit. And I remember having so many discussions with the first or second time. And every time they came back to me, they came back with something different than we talked about in the proposal every single time. And I thought, if that's how we communicate now, how are we going to communicate as partners? How are we going to communicate working together? This is just definitely not going to work.
Yeah. So sometimes taking that time as you go through that process. And, I remember, was it last week, even someone was saying, but we've spent so much time, and somebody used the analogy of, dating a lot of people or kissing a lot of frogs. I think we did that one time as well. That's kind of part of the business, though. Do that get to know you piece so that you can make that decision, take that time up front. I always say always heavy up front or, heavy load up front, because it'll make it easier on the end. I think it's totally fine. But I do have to share one story where this one person was trying to sell their business. But Candice, you'll get a good kick out of this one. They had several businesses in one, and they didn't tell their accountant they were trying to sell. And then they were saying, but we just need to pull this out. This part is for this business. And I said, look, You're trying to sell a car, but nobody can see the car. You can't see the car that you're trying to sell. We can't see the car. For due diligence, we need to go in and, as a mechanic does, we need to inspect and look under the hood and go through the process. But either we can take that cost on or you can take that cost on. And I had said to our guys, the buyer, oh, let's take the cost on. Let's do the whole work, because then we'll really understand it. Within a matter of hours, I got a phone call saying, no, sellers are taking it on. They're going to take it on. They'll take everything. They'll take care of it. And maybe that's why they weren't able to sell the business the last 10 times. And they were getting that frustrated. But this time we opened it up as gently as we could. There was a bit of a timeline. There's a bit of a lag. You got to just sometimes buckle down and do the work. If you want to sell that really nice car, the other part of the work is preparing for the sale. So there's the back end legal and tax side. But the other part of it, and you guys know this so well. I mean, Candace, look at what you've done with your business, is getting stuff out of your head, document, process, systematizing, making sure the owner is not the business, and trying to pull back everywhere you can so that it becomes what we call a turnkey business. So you guys can chat about turnkey and what that means and what it doesn't mean.
Well, I have to tell you, it's a reduction of stress I'll tell you, I get way fewer questions about things today than I did like a year ago, 2 years ago, because it's all been documented somewhere. So it's crazy how much of a difference it makes in day-to-day life, for sure. Even though I'm not ready to sell yet, I know it's going to make it easier to sell when it is time to sell, either to employees, some other firm, or whatever the case may be. So
not only that, you've made yourself so much more competitive. Right?
Oh, yeah, for sure.
So no matter what, all these steps are making you saleable, or making you attractive, or making you a stronger competitor in your industry, which is why I always say what I said earlier. Planning your exit is just as important as every other part of your business.
It's kind of the last thing you think about, and maybe it shouldn't be. I think that preparing for it on a day-to-day basis and being ready up 5 years ahead. And I don't say that lightly. It takes a good long time to sell a business. And if you're thinking about it 5 years ahead, then you're likely going to be able to sell it. If you're thinking about it now and you want to sell next year, get your running shoes on.
You'll be running. You'll be running.
Like, it's way better to start the process early enough that you have something concrete when a buyer comes knocking, if that's the case.
So let's flip it really quick to the buyer side. So there's an opportunity here, right?
There must be.
We've got a lot of businesses changing over. They could just be winding down. They might be kind of in that mindset, Peggy, where you're at, and you're tired and you're just like, I'm done. It might be, it's just too much, right? So I don't even want to bother starting to figure this out, because one of the other big pieces that came out is to like why, one of the hardest things to figure out for sale of a business is valuation. I mean, there's just so much out there, right? So many different ways to take a look at it. And then there's a cost involved as well. So maybe buyers that are considering, some different type of opportunity in life after everything that we've gone through, if you are interested in looking at buying a business, now is a great time to consider it. And if you're not sure how to find a business, just get out there and start talking, start networking. If once you put that idea out there, same thing with the sellers, where I said you can chat with the people that you know. Same thing with the buyers. We all know how many people, how big is our network, and just putting stuff out there. I get emails all the time for connection requests and other things. I'm sure you guys do too, right? So hey, we've got so-and-so looking for something. And then there's all these, succession matching sites that are coming up everywhere on looking at opportunities. So this could be a really great win for both sides. And I guess the biggest win would be for Canada, where we don't lose businesses. We just don't want to. When we were looking at some of the stats, and this one came from Stats Canada, I think it's almost 98% of businesses in Canada are small businesses. We don't want to lose those.
No, we have to preserve it somehow. Well, ladies, I think we've hit that time in our podcast where we need to do a quick fire. Candace, how's this for you? What did you learn? What do you need to add to the conversation?
I think I'm going to emphasize the paperwork side of it. Get your numbers in order, get your processes cleaned up, especially on the finance side, so that people can see the car that you're trying to sell. And using Rita's analogy there, if they can't see the car, they're not going to buy it. So And if you're a buyer, if the business is a mess, sometimes there's an opportunity to get into a business for just the bare cost of the identifiable assets. And there might be more to it then, but because the seller's not organized, you have a bit of an opportunity there. So,
Rita.
Yeah, I love what you said, Candace. There's always two sides of everything, right? I think going forward, there's a tremendous opportunity for all of us to add support on both seller and buyer side. No matter what side you're on, or if you become a part of this process, as a business advisor and maybe an accountant or a lawyer, broker and such, let's all act in good faith. That's, for me, one of the biggest things. Is the reason why we get kind of messy situations is because negotiations sometimes aren't done in good faith. And it's okay to have, discretionary things, just share it. It's okay to be able to say, I've only got this much. Is that going to work? Is that not going to work? Because you never know. So I think it's so important for us to be acting in good faith to support on both sides.
All right. And I actually want to just emphasize to people that I don't think my experience was unique. I think quite often you're going to kiss a few frogs before you find the one. And it's okay. Learn from it and narrow it down through that process. What is it you liked? What is it you didn't like? What was wrong with the buyer? What was wrong with the offer? And trying to figure out what that looks like for you. And you will learn. You'll learn quickly whether this is the right buyer. So good luck, everyone.
I guess in conclusion, that succession tsunami, say that 3 times, is no longer kind of in the distance. We're here, like we are in the middle of it right now. For sellers, if you haven't started the planning, all good. We understand there's a lot on the go, but let's start. The time to plan is now if you haven't already gone through that. For buyers, hey, you never know what you might be finding out there. Some beautiful, incredible businesses, and you can hit the ground running versus starting it all from scratch. So thanks for tuning in. Another episode of Serenity Now. Make sure you check out that Succession Tsunami report that we pulled from CFIB. We'll leave it in the links here. It offers some good guidance, some stats and understanding as you go through this for both buyers and sellers. And we hope that maybe this episode has given you some serenity now. Thanks, everyone.
We hope you enjoyed this episode and picked up some good tips and best practices that would benefit your entrepreneurial journey. Remember, none of the content in this podcast should be relied upon as standard legal or business advice. Always consult a professional for your specific business. You may know someone who could benefit from this podcast. Please share it with your business community, and perhaps it can give an entrepreneur you know some serenity now.